Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up about 0.6% on the S&P. We did see NASDAQ getting about 1% there. Semiconductor continues to make a move, up 2%. We got Dow, the small caps, and the transport up about 0.5%. Energy in the banks is negative today, but keep in mind that the energy is up 43% year to date. Small caps up 20% year to date. Financials up 20% year to date. Transport is up 13% year to date, while the S&P and the NASDAQ is lagging. But anyway, so looks like biotech did make a move there. Emerging markets up slightly. Grayscale Bitcoin is up about 3%. Gold and silver made a little bit of move there. Potentially there might be getting some traction there. I think we're pretty oversold on those. Treasury bonds up a little bit, dollars up a little bit. VIX is down about 4% today. So let's stick with the S&P 500 ETF Spider 65-minute chart. And we've came a long way, and we're back to the new all-time highs here, and continues to cultivate higher highs. And isn't that interesting how quickly the sentiment changes? And we talked about this, and here you can see this is back in March 4th, and things were pretty ugly when the S&P came down from like 394 to all the way to 375 or so, almost 370s I think at one point. We talked about the pivot, but just think about what the sentiment was like when the S&P was going through that volatile environment. Just think about what were some of the articles you've been reading? What were the tweets you've been reading about? What are some blog posts? What about some of the YouTube videos from these guys? What were they saying? Well, they're guided by their fear. They were looking for much steeper pullback or crash or bear market or whatever they're saying. So that's why this is the reason why you do not want to let the fear guide you. Do not let anyone else to impute fear. We have to stick with the trend that's been working. You see what I'm saying? If we're on an uptrend, we must give benefit of the doubt to the buyers. And that means when the pullback occurs, it is pulling back. And it's been doing this ever since, the October. We're talking more about midterm, right? Since the, late October, that pre-election, we have to understand the market is in this fashion. We got that midterm move. But within that midterm, and I said this thousands of times, within that midterm, we will see the fluctuations, right? Why is everybody looking for? Does people really actually thinking the market is just gonna go straight up without its fluctuations? Then you don't understand this market, and you do not. If you don't understand how this market operates, and you're not gonna able to profit from this market. Corrections, pullback, declines, shenanigans, head fakes, all of that is just all part of this market's normal, not crazy, normal behavior. This is why you don't understand short-term, mid-term, long-term, primary term, macro, secular. You must understand in all terms so you can have to prepare for these different corrections that market is going to give you. So anyway, we're here now. We're back to all-time highs. We're back to all-time highs. And as the market continues to cultivate and establish new highs, it is affirming to us that this market is in a bull market. We're not in a bear market rally. We're not in a disconnected from the reality. We're not because it's all manipulated or rigged. This is how this market operates when it's in a bull market. It continues to print new all-time highs. It will be fluctuations. There will be corrections. There will be shenanigans. Some days there will be some heart-throbbing gap downs and bloody red days. But if you understand the big picture of things, market likes to make those higher lows and higher highs, and in due time it will go where it needs to go. And so our job is to stick with the scenario that has higher probability of playing out. So we're in new all-time highs here, and this market continues to cultivate higher lows and higher highs in the short term, right? We're bullish in the short term, we're bullish in the midterm, we're bullish in the long term. So you can see that my short-term moving average right here, that short-term moving average, it got retested back in March 8th. And ever since then, the price been staying above my short-term moving average every single day. And with that, market continues to make a move to the upside, right? So we want to continue to give benefit of the doubt to the buyers. You can see these three gaps continue to remain open. Remember what we talked about back in a couple weeks ago, right? When things were still kind of gloomy a little bit, when people are still very much scared. Talked about when this gap was open, right? When this gap was open, if the buyers can protect this gap, that will be it. That will be it. Buyers are going to take control back and make a move to the upside. And this gap never once even retested. We got close here on this day, but it didn't even get retested. We saw gap up again next day, another gap up next day, and we're back here, up here today, printing 396. Looks like we're not too far from 400. Let's check out that oscillator here real quick and see what that might tell us. So looking at the oscillator actually just crossed. And so with that, oscillator crossed and that gap held. You see that? There's this gap support. We talked about this over the weekend video. This is a gap level to find support. And this, we talked about also, this is that level right here. This is an important pivot. We covered this on the weekend video. That's a prior resistance and the gap support, coinciding the gap support. So that's kind of like a double support because that's a prior resistance and the gap area, little double bottom here, and made new highs today. With that, we saw the oscillator actually affirming this move with that cross, which I've been tweeting out this morning. Right? So once that crossed, you can see that there was that momentum that we saw towards the end of the day. And we're not overbought at all. We actually do have room to move here, as you can see. We still got room to move to the upside. That means, you know, if buyers want to continue to push it to the upside, they have room to move. They're not tired. There was some rest going on here. There's some consolidation, a little pullback right there, some little bit of consolidation. Buyers were able to rest in that through this consolidation, through this like a micro term pullback sideways resting period there. And with that, oscillator was able to reset a little bit and we're going right back up here. So we want to continue to give benefit of the doubt to the buyers as the market cultivates higher lows and higher highs. And in that process, what it does is it puts new pivot levels and new support levels. So if this thing market starts coming back down, we got 394, 394, or 395, 394, you know, and again, maybe even 391. We talked about this level right here that we found support today, right? And so as the market makes a move to the upside, not to mention, obviously, we have my short-term moving average residing at 392 as of today. So as the market moves higher, these lows and prior peaks will provide a new support, right? And so going forward, we want to be positioned in this way, obviously. And I said this to you guys, even at what seemed to be to many the worst, environment for this year. That long-term investors, right, position traders, this is a level that you should not be worried about, right? And I probably said the same thing all throughout these pullbacks, that if you're a long-term investor, if you're long position traders, this isn't something you should worry about. This isn't something that you should be freaking out about. We're still in an uptrend in the midterm and the long term. And if anything, we talked about that these levels you look for a value. some of the sectors and stocks that is undervalued. You don't want to chase stocks that are already up too much, but you want to look for stocks that has a potential to make a big move for the next up move that is about to come. Let's see how the market plays out tomorrow. I'll come back for you. Enjoy your evening and good luck trading tomorrow.